Welcome to the Economy Magazine. I'm Binyamin, Tjong-Alvares with the news from the global economy. On today's show, we review the options available to Greece as its newly government stubbornly stands by its principles, and look into the innovative solutions meant to secure makeshift homes in South Africa's townships. First, the headlines. HSBC's Swiss banking arm helped wealthy customers avoid taxes and hide millions of dollars, according to a report by a network of investigative journalists. Secret bank files show HSBC provided accounts to international criminals, corrupt businessmen, politicians, and celebrities. HSBC profited from doing business with arms dealers who channeled motor bombs to child soldiers in Africa, ICJ reported. The British banking giant in 2012 paid a record $1.9 billion fine after an investigation found Mexican drug cartels had used the bank to launder hundreds of millions of dollars. The robust US dollar is forcing firms and banks to hold even more in capital than US Federal Reserve had suggested, big US banks said. The Fed rule proposed in December is aimed at forcing big banks to add extra layers of financing to protect against losses. But the stronger dollar may not penalize US banks, as the high exchange rate makes their dollar-denominated assets look larger than their European peers. The strong dollar also weighs on the profits and sales of corporate America, as sales abroad suffer and fail to keep up with dollar-based costs. Chinese trade dropped in January, but as imports dropped more than exports, the monthly trade surplus grew to a record $60 billion. China's exports fell 3.3% in January from a year earlier, while imports plunged by 19.9%, according to data from the Customs Administration. The majority of the slump in imports is due to falling commodity prices, especially coal and oil. China's iron ore imports and crude oil imports declined by 9.4% and 0.6% respectively, though in value terms, iron ore imports dropped 50% and crude oil fell 42%. About 30 Hong Kong investors fear a loss of nearly $4 million after a Bitcoin trading company suddenly ceased operations, local media reported. Investors filed a police report after MyCoin stopped its operations last December without informing its clients. According to investors, the company kept changing its policies so that clients could not cash in. The police may not take the case, as the company did not provide written records of the transactions.
I had watched the news about Bitcoin, and I knew investments come with risks. I had a lot of misunderstandings. I did not know this was a one-year contract. They did not tell me.
Greek Prime Minister Alexis Tsipras said he will not accept an extension to Greece's current bailout and pledged to roll back austerity. Tsipras stressed the government's unshakable decision to honor all pre-election promises as a matter of honor, credibility, and respect for democracy. Greece wants to service its debt, Tsipras said, and invited its creditors to come to the table of dialogue to discuss how to make it viable. In a symbolic move taking direct aim at Greece's biggest creditor, the new prime minister finished with a pledge to seek World War II reparations from Germany.
The historic obligation of the new Greek government is to claim World War II reparations. It is our duty to history.
And we stay with Greece, the Eurozone's most indebted country, as I24 News reporter Dallin Roth compares it to Portugal and reviews its options given its standoff with creditors.
Greece's new governing coalition is getting to work on untangling the €240 million in troika debts the previous government took on to weather the global crisis. But the European Central Bank said last week that it would not accept private banks' use of Greek government bonds as collateral for loans. Greek banks will still be able to borrow via an emergency program at a higher interest rate. The move was in response to the leftist government's intention to renegotiate the country's debt. There is growing concern that Greece and the EU may go their separate ways. Still, many support the new government's push.
It's the first time in decades that a government is making a decision, if not to clash, I don't really like this word, but at least to draw a line and say that the people can't take it anymore.
While critics of the Troika's lending policy say that the money Greece has received ended up in the hands of the banking class, not the public, Portugal, another hard-hit southern European country, suggested that there is another path to paying debt back within the scope of an agreement. Portugal paid off its €78 billion debt to the European Union and IMF last year by enacting massive austerity measures, including major tax hikes and deep cuts to spending. The official government forecast for 2015 is 1.5% growth.
We follow the path that we had to take. The Portuguese people deserve to be praised and congratulated for the enormous effort and social cohesion they showed during the hardest times.
Still, 13.5% were out of work in Portugal in the fourth quarter of last year. Meanwhile, Greece's new economy minister has warned that it needs between $4 and $5 billion to tide over its budget as they work to renegotiate their debt. So far, creditors have not stepped forward, which may leave Greece out of cash and seriously contemplating a euro exit.
And we're joined now by Arya Chertoff from data analysis firm TipRanks for a look at the markets. Mr. Chertoff, thanks for joining us.
Thanks for having me.
So who are we looking at today?
Well, Coca-Cola, Pepsi, the Cola Wars, and then CVS Health.
Okay, let's hear it. What's going on with Coca-Cola?
All right, so Coca-Cola is announcing earnings this week on Tuesday. They're expected to post $10.76 billion in revenue for the quarter, which is down 3% from the same quarter a year ago. And if that's true, if analyst estimates are correct, it'll be the 7th out of the 8 last quarters where they report negative, or a decrease rather, in earnings.
Why is it happening?
So there are a couple of factors playing into their struggle. One, first of all, is the strong U.S. dollar is hurting exports. Mm-hmm. But even within the U.S., domestically, there's actually a growing consciousness of health issues, and people are preferring alternatives to high sugar, high calorie drinks.
High fructose, et cetera, et
yeah,
cetera.
corn syrup. So
right.
Yeah, they're preferring bottled water, coffee, tea, and energy drinks.
Of course, those also have sugar, but that's beside the point.
Yeah, but somewhat less. So Coca-Cola is trying to adapt to these changes several ways. One, they have our new brand of Coke, Coca-Cola Life, which has the green label and about 60% of the calories that classic Coke does.
Yeah.
In addition to that, they also purchased 16.7% stakes in both Monster Beverage and Green Mountain.
Which, if I'm not mistaken, did very well, didn't they?
So both of those companies actually have done very well. Green Mountain, Monster Beverage especially, investors there have done extremely well, whereas investors in Coca-Cola have not done as well. But of course, you should remember Coca-Cola is still a favorite of Warren Buffett's, and a lot of analysts are saying, or bloggers rather, mostly saying that you should still probably listen to him. He knows what he's talking about.
Okay, well, a favorite maybe in terms of the actual stocks, the shares, which by the way I think are very expensive. But what about Pepsi?
Well, Pepsi actually has not been hurt by the same trends, mostly because they have a big position in the snack foods market. That's probably their main business, and they actually also have their version of a new drink. Same exact idea, green label, Pepsi True. It's like exactly the same thing. It's also sweetened with the same amount of sugar and stevia.
Strategy, huh? It's basically all buying into this concept that
it's a continuation of the Cola Wars, though it's much newer than Coca-Cola's version, and also at the moment it's only available online.
Interesting.
So, yeah. Of course. They probably want to see first how that goes, and before they start, selling it off in retail stores.
Right. And lastly, you said CVS as well.
Right. So they're also reporting earnings this week on Tuesday. They're expected to post $1.2 $21 per share earnings. And a little over $36 billion in revenue.
Okay.
They're doing well. They have a very strong position in the specialty drug market, where they have drugs for hepatitis C and MS. They also have a deal with Gilead Sciences, where they're going to sell only their drugs for hepatitis C.
Interesting, which would be a very good thing, obviously, for Gilead Sciences.
Yes, exactly.
Okay, well, Arya Cherta from TipRanks, thank you so very much for joining us.
Thanks for having me.
Thank you. Moving on to South Africa, where innovative tech solutions for makeshift homes aim to make township conditions safer. Here's the story.
Technology is being utilized in South Africa to help make life safer for millions living in poverty. With the cost of living rising, a quarter of people out of work, and widespread poverty, innovative solutions for safety concerns for those living in makeshift homes are a necessity. These South African entrepreneurs at a tech conference in Pretoria are working on solutions for everything from fires to floods.
We're not trying to make shacks any better, but what we're trying to do is we're trying to prevent the loss of life, loss of belongings, and sometimes loss of livelihoods that always accompanies flooding in informal settlements.
The close quarters and impermanent design make these living quarters dangerous. Summer fires set Cape Town townships ablaze in 2013, leaving 4,000 homeless in 2 days. While homes may not be savable, safety can be made more of a priority.
Our product is a shack fire early warning system. So we've produced this device over here, which gets mounted inside each of the shacks inside one of our informal settlements or one of the slums that abound around the earth.
While technology can help make life better, there is acknowledgement that it has its limits.
We have to live in the reality that we find ourselves in. We have to work around that reality. So what do? We do the best we can, and the best we can is to take the shack environment and make it a safer place for people to live.
Though urban housing options are lacking and economic stability eludes many, small advances can sometimes help to alleviate, in part, the hard reality of poverty.
Some people pay to work. Others get paid because of the hard conditions underlying their arduous commute to work. ITV News reporter Daniel Rod joins us now to discuss some odd work-related stories in Media Watch. Daniel, thanks for joining us.
Thanks for having me.
Hey, indeed.
So the Detroit Free Press has this story about a Detroiter, a guy named James Robertson, who was making a commute to work for years, 21 miles by foot and 2 buses.
Wow.
And so a teenager, a guy studying computer engineering at Wayne State University, put up a GoFundMe page for this guy that first brought in a couple of $100. The idea was to help this guy to get a car to make his life a little easier. As of last night, he hit $350,000.
That definitely makes his life easier, doesn't
Yes, absolutely. So
How much does he make?
He makes $10.55 an hour. So this is a huge, huge change. This is a guy who makes just over $10 an hour. I don't know if you can imagine that, but this is, he's not just starting out in his career. So
he's an older guy.
He's an older guy. He's actually got a free financial management coming to him now, so that the $350,000 goes to good things. And one of the best parts of this story is that he actually closed down the GoFundMe page, or is closing it down today, I believe, saying, "I've got enough. Let's let someone else get a ride to work."
Oh, that's great. That's great.
So it's a nice little story. The Washington Post has this piece. Treehouse Inc. They took Casual Friday a little further and said, actually, don't come into work on Friday. So they actually just have a 4-day work week, a 32-hour week. And it does wonders. It's not a small company. This isn't a small thing. It's a trend in the tech world, of course, because the tech world tries trendy things. Mm-hmm. Not everyone's doing this, but this is an 80-person company. It's been doing this for something like 4 or 5 years, and they say that it's been not only okay, but it's actually helping their business. What they do is they teach people computer coding. They've put over 100,000 people through through their course. Compare that to the 10,000 or so people who have been through computer coding courses like this in universities in the U.S. in approximately the same time. And you're talking about a company that's not only doing a nice thing for their employees, but they're doing well by doing nice for their employees. And people are finding that they're able to mix their careers into the rest of their lives.
I mean, that's fantastic. Of course, I mean, this company's able to do that. Not every company can do that, can they?
Right, because some companies just work on sheer numbers. Right. So the question is how exactly can companies that work on sheer numbers shift their models?
Okay, well, that'll be interesting to actually look into further. Thank you very much, Daniel Roth, for joining us.
Thanks for having me.
Well, that concludes our Economy Magazine, your daily source for economic and financial reports at i24 News. I'm Binyamin Tjong-Alvares. Do thank you for watching us and continue watching us and join us again tomorrow for more on the economy.